Okay, so recently I've been doing quite a bit of thinking about different asset classes and how best I'm going to be structuring my portfolio and what's the best way to maximize returns over the next decade, 2 decades or so. So today we're going to be doing a bit of an analysis of the three major asset classes. Well, I guess four. First off, we've got the Aussie dollar. Second off, we've got stocks, and especially the ASX 200, or the top 200 companies in Australia. The third lot, we've got Australian average house prices. And the fourth lot is cryptocurrency, and I'm going to be using Bitcoin because it's the longest standing asset in the sphere. So the reason why I'm going into this is because we know that inflation, everyone's been talking about inflation recently and how it's driving the cost of living is going bananas, all these kind of things, and it's super hard to live these days. So as we can see from this graph here, this is the amount of the Australian money supply, as you can see up there, and that pretty much means how much Australian money is made. How many Australian dollars are there? So back here at the very start, well, when this chart started to be created was the 1st of January 1965. And when we go horizontally across here, we can see it's roughly at around about that $10.36 billion. And that was the maximum amount of Australian dollars there were. Fast forward to today, and we can see we're very close to hitting $3 trillion up here. So now there are $3 trillion in circulation or printed, whereas back in the day, in 1965, there was only around 10.5 billion. So we can see that over the years from then to now, that the amount of money has increased by about 28,800%, which is a lot. Which means that if $1 back then was worth a hell of a lot more than it is now. So it's been massively diluted if you just held $1 from then to now. So recently, people have been talking about the cost of living and inflation since COVID. And if we zoom into 2020 here, yes, we can see it increased a bit, but overall, really, for decades now, and this is a logarithmic chart as well, it's been going fairly steadily upwards, maybe slightly tapering off, but overall, that's a pretty straight line. And it doesn't look like it's slowing down anytime soon. If not, it's starting to accelerate, especially with what happened to COVID. Okay, so let's move on. We've got next the Australian Housing Index, and this starts at the 1st of July in 2011. And so this is pretty much the Australian average house prices shown by the Australian Bureau of Statistics. So we can see that the average Australian house back in the 1st of July 2011 was $490,000, as you can see over here. And then over time, it's been a pretty good investment. It's had its ups and its downs, but overall, this is what you want to see, a chart that goes from bottom left to top right, meaning that the asset is appreciating over time. So in that time, since this chart started, 1st of July 2011 to now, we can see that, that was the wrong tool. Here we go. We can see that the Australian house prices, on average, increased by about 90%, so nearly doubled in around about that 13 years. So, okay, now let's move on to stocks, or the top 200 stocks in Australia, and this is an index of them. Again, this chart goes back a bit further, as you can see. So it starts in 1980 and it goes to now. And we can see that over time, the stocks have appreciated in value. Yes, they've had ups and downs as well. Now, if we take that same amount of time that we saw for the Australian housing, so 1st of July 2011, and we take it to now, we can see, and we'll just use this tool, 1st of July 2011 to now, we can see the stocks have gone up 95%. So very similarly, pretty much in lockstep to what house prices have done in that time, which is good. We want our assets to appreciate in value. Now the question is, we know that they're going from bottom left to top right, so they're appreciating in value. However, have they been appreciating in buying power? Which is an extremely important question, because we know that dollars back in 1965, or even in that 1st of July 2011 at that time, then they were worth more then than they are now. So have Australian housing prices and stocks, have they been, and also cryptocurrency, have they been keeping up with the Australian monetary supply? Or have we been inflated and are our dollars worth less now than they were back then? So to start off with, actually, before I go into that, let's have a look at Bitcoin. Bitcoin is the outlying asset class here. So if we go back to, again, the 1st of July 2011, if it'll let me, there we go, to now, have a look at that percentage. What is that? That is 1.2 million% increase in that same time. So we can see that if we put $1 in to Bitcoin in the 1st of July 2011, compared to if we did it in stocks or in Australian housing, this has hugely outperformed those other two asset classes, massively so. So now what we need to do is we need to compare these asset classes to the Australian monetary supply, and we also need to compare them to each other as well. So let's start off with the Australian housing supply. The Australian housing prices, the average. So this is the Australian housing prices denominated by the Australian money supply. So essentially, are we making money on Australian housing or are we getting inflated? And we can see here that we're being inflated and we're being diluted with our buying power over time. So again, if we start at around that 1st of July 2011 to now, look, it's not terrible. We've lost 12% of our buying power. Now, take into account that the average house and the average, the ASX 200 or the top 200 companies in Australia, the index, they normally appreciate at around about roughly 8% per year. So this means that we've underperformed in that 13 years by 12%, which is approximately a year and 3 or 4 months worth of gains. So we have lost out over time, but it's not terrible. It's only about a year and a third's worth of gains. Even so, we want to be beating inflation with our investments, so we're not losing our buying power, which over time, and actually we can see this with the next one, which over time will be even more pronounced. And you can see this is going back now to the 1980s, 1st of Jan 1980. And we can see that over time, it doesn't change. We are being diluted in our buying power in Australian stocks, as well as Australian housing prices. There have been times, yes, where it's outperformed, but overall the trend is downwards. And the same thing with stocks. The vast majority of the time, you're underwater in terms of the Australian monetary supply. So if we go back to, again, the 1st of July 2011, because that's our reference point, that's when the other graph started. 1st of July 2011, this point here, and coming down now to the present day, the most recent data source, we can see here that we are down by approximately 9.93%, so 10%, which is better than the Australian housing supply, which was 12%, yes. So the stocks have actually performed better by a little bit more than 2%, which is good. But even so, it's nothing to write home about. It's not a huge amount of gains. So again, but I guess this chart is even more telling that over time, we're being diluted by putting our money into the index funds and putting our money into stocks. So now, if we come back to this chart, this is what I was saying before in terms of the Australian average housing price versus the ASX 200 over time. And we can see that for the first part of the last, approximately decade, we can see that the Australian housing prices actually underperformed. There was a point where they came down and stocks were 20% better than it. And then it rallied quite significantly around about that 2015 time, and then again it underperformed. But since around about that 2019, so just before COVID, the Australian housing prices have really largely taken off and have at the most outperformed stocks by a whopping 42%, which is absolutely massive. But over time now it's corrected, and really if you put your money in the Australian housing versus stocks in the last 13 years or so, you'd be down 2.5%. So nothing to write home about. They're pretty much in lockstep. So then we come to Bitcoin and cryptocurrency versus the Australian money supply. So this is Bitcoin denominated in the Australian money supply, and this is the one chart that I've shown tonight that appreciates in value when you compare it to the degrading powers of inflation. We can see, again, let's just to keep it nice and standardized, let's go to the 1st of July 2011. And that's actually when this chart starts as well. So we're going to take that from there, and we're going to, what's that? 663,503% outperformance by Bitcoin over inflation. So it's a pretty clear picture here that cryptocurrency is the only major risk on asset class that is outperforming inflation, and the only way that we can not only preserve our buying power, but also increase it. So, so what does this, and then again, it's the exact same thing when I compare it to the Australian housing price and stocks, is just, again, bottom left to top right, massive outperformance by Bitcoin and the cryptocurrency index. So what does this mean going forwards? It means that the Australian dollar, if you keep your money in it, you're definitely going to be losing your buying power. Same thing with the Australian housing prices. You're going to be losing money at a slower rate. It negates the effect quite nicely, but you're still over decades going to be losing out to inflation. And the exact same thing with stocks, and that's exemplified here since 1980, that you are going to be diluted in your buying power over time. The only asset where you retain and actually gain purchasing power is cryptocurrency, it seems like at the moment. Now, yes, I don't expect that it's going to continue at this ridiculous percentage going forwards. However, I would expect that compared to these other asset classes, that it will continue to outperform going into the future. But again, nobody knows. But if we can't look back at data, then we have absolutely no chance of predicting it going forwards. That's at least what I think. So to park money in a way that you won't be degraded, it seems like cryptocurrency is the most logical outcome. But again, housing and stocks, you will be degraded, but not by a huge amount, by approximately 10 or so percent every decade. So that's all I have for today. I hope you found it interesting, and I'd love it if I could hear what you have to say about my thoughts.